All right. So here are, put this somewhere. Okay. So here are a couple of my accounts. What three type of accounts do I have with Schwab?
IRA. Two of them. Roth IRA.
Which one is the traditional IRA?
Roth.
The rollover IRA. So why do you think it's called a rollover IRA? What do you think I've done in the past? What did I move into the rollover IRA? Yeah. So when I left my financial advisory job, I had a Roth 401k. And remember, the Roth 401ks, do they come with a mixture of pre-tax and after-tax money?
For what?
For a Roth 401k, do they have a mixture of pre-tax and after-tax money? Well, my contributions to the Roth 401k are all after-tax.
Oh, was your employer's?
My employer's contributions, their matching contributions to the Roth 401k is pre-tax. So when you close out a Roth IRA or Roth 401k, you do have a mixture of pre and after tax that you have to separate. And all that takes is calling into your 401k administrator. In this case, mine was Fidelity, and telling them, hey, can you take the pre-tax amount of my Roth 401k and send it into this rollover IRA that I've created? And then can you take the after-tax portion of my Roth 401k and send it into my Roth IRA that I've created, right? And so they do that. Rollovers do not count toward your $6,000 contribution. When you do a transfer into an IRA or either traditional or a Roth, it does not count against your $6,000. You can still contribute $6,000 to your Roth. Okay. So here I have three accounts: the individual, which I pay tax on every year based on gain, the traditional or rollover IRA, and then my Roth IRA. Okay. You can see type, brokerage, IRA. And then this is the amount of cash that I have in each account, followed by their current balances. And if you look at the year-to-date chart, what was this? Yeah, it was at the beginning part of COVID when the market was taking a hit, and I lost about $27,000 in
I know you feel bad.
a month. Yeah, in about a month, I lost about $27,000. Now, was that loss realized or unrealized? It was unrealized. It's only a paper loss. The only time that it would become an actual loss is if I chose to sell at that low, if I chose to sell everything, go to cash on March 23rd, 2020. Okay, then it would be an actual loss and I would have lost $27,000. Yeah. But instead what I did was as things were going back up, I didn't feel entirely comfortable in some of the positions that I was in. So once they reached the pre-COVID levels, I did go ahead and sell them at that point. And then I used that money to invest in other companies that I thought were cheap. Okay. So which account do you want to take a look at first? Individual, you want to take a look at individual first? Okay. What time does the market open, by the way? 8:30 Central. So I will place a trade, but is that trade going to be executed during this class?
Nope.
No. Well, it will be executed during our homeroom, which we have chapel. Dang it, I forgot to post this stuff on chapel. Okay, we'll cross that bridge when we get there. All right. So Gain or loss, this is, I believe, from the year. No, that's not total gain or loss. Okay,
That's too much.
what is?
All those numbers.
All right, so equities, what are equities? Stocks, okay. US Bank, how many of y'all have heard of US Bank? Okay, so I've purchased some of them. Retail Value Inc. This is a company that it's an investment company that buys properties like shopping centers, like where you'll find Lowe's and Home Depot and PetSmart, all in those big open. They are fairly cheap right now. You know, they were trading at $13 right now, but if we take a look at them, close some of these other tabs. Yes.
Aid is on his way.
Okay, thank you.
Thank you.
Okay, Retail Value Inc. Pre-COVID, they were trading at around $35. Okay, COVID happened, down to a low of 8, and I bought somewhere around here. Okay, one of the reasons I chose to buy them is, see if we can find look at that dividend yield.
Do you think they're gonna go back up?
I do, because here, earnings per share, this was the earnings per share in June 30th, right? So midsummer. Even with COVID going on, did we see people still go to Home Depot, Lowe's, PetSmart? Like going to those, not necessarily going to an indoor mall, but going to the outdoor places. We still saw people going there, right? If it was an online order to go pick up or going in there for physical shopping. So I didn't see that the way this company makes money is off the rent paid by Lowe's, Home Depot, PetSmart, all those other places. And I didn't really see those companies being forced to stop paying rent because of COVID. I thought that their revenues were going to continue, maybe at a lesser extent, but they were still going to continue. And as of June 30th, their earnings per share is still positive, right? It's not as high as it was, but it is still positive, which I liked. Further down, or I guess it was, let's see. Earnings. Okay, so we had revenue here. Cash flow has been positive for the most part. Okay. It's statements that I want here. Yes. Okay, so I'm looking for the amount of debt that this company has. Because if a company has too much debt, are they going to be able to pay the dividend? No. Where is it? That just looks like revenue. Balance sheet, sorry. Income statement. So income statement is going to be your revenue versus expenses. Balance sheet is going to be your assets versus liabilities. So their total assets are about 3 times the amount of their total debt, which means that if they had to, absolutely had to, they could sell everything they owned, pay off the debt, and they still have money left over. That gave me, that did not hurt my concerns. They have a total positive equity here, right here. Okay. So, but that's one of the reasons I chose to buy that account or buy that company. And it's fluctuated recently between the 11 to 13, $14 mark. Yeah. Okay. There's the AT&T, also a dividend play. Okay. Alliance Bernstein, this is another real estate company. And then Total. Has anyone heard of Total? They are a French energy company. Now, have energy companies been hurt? Yeah. Well, I mean, are people driving or flying as much?
No.
No. So what's happening to the demand for oil? The demand for oil is falling. And if the demand for oil is down, the chances of or the profit coming in for oil companies is down. Okay. Total is a French energy company, and they don't just do oil and gas, but they do other renewables and stuff. So I was like, okay, it's more diversified. So those are my equities at this point. Then I have some ETFs. What does ETF stand for? Exchange Traded Fund. And these are the positions that I'm trying to rotate out of. So this is just a short-term high yield bond ETF. Okay, so this is my fixed income play. Then I have a small cap, which small cap, is that riskier or more stable than long cap? Are small cap companies riskier? Yeah, the small cap companies are riskier. So I expect a lot of volatility out of this play. And then this is my international play. It stands for Developed World excluding US. So that's what this here means. The SPDR portfolio, Developed World excluding US. So it invests in companies around the world that aren't based in the US. Okay. And you can kind of see how they have done over here. The bond fund has been hurt a little bit, but I'm getting a high dividend on that. So the dividend has counterweighted the market loss here. Small cap, it's up, but I am waiting. This is the one that I'm waiting for it to get back above the pre-COVID level to sell. And so pre-COVID level, we're almost there. It's about 172. And right now it's trading at 162. I've made money off of it already. So if I sold it, I'd be positive. But I would like for it to get right back up to the 172 mark. And then I'm going to go ahead and sell out of it and rebalance that money into a different account or into a different investment. All right. So in terms of a trade that I will make on this account, I would like to get, let's see, I have $7,800 in cash that I can put in one of these accounts. Right now, AT&T is slightly down. And so when a company is slightly down but you feel like they are a good, solid company that will be around, would that be a good time to buy? Yeah. So I think I'm going to add just a little bit to get this back up to $5,000, a $5,000 investment. Each of these I put, every time that they would drop in value below 5,000, I would go in and I would buy additional shares to get my price up to 5,000. And so you can see with RVI and US Bank, I did that when they dropped. So bought those additional shares at a lower price. And since then they've come back up. And so it's above 5,000. All right. So to buy, I'll come over here to click on the ticker symbol, which AT&T is T. Okay. Click on trade. Okay. So there's a lot of information on here, right? Kind of go through it step by step. Up here it says cash available to trade. So I could buy $7,800 worth of AT&T if I wanted to. I don't, because I want to have that cash in case there's another dip in the stock market. It's good to have cash on hand that you can go in and buy. Okay. You don't want to keep too much in cash, because what if that dip never comes and the stock market just keeps on going up and up and up? Then by keeping all your account all in cash, have you lost out on that growth? Yeah. So it's trading at $28 a share. Let me get a okay. I am going to buy. Okay. So the other two options, I could sell or I could sell short. That's like taking a bet. Selling short is like taking a bet that you think the price is going to go down. So to sell short, you start getting into the options trades, Braxton. Right. So I'm just going to do buy. It's not letting me do the calculator. Interesting. Yeah, I'm afraid we're all going to buy. Okay. Let's see. What was I at? 49.45, I think. So 5,000 minus 49.45, 55. So I'm only buying, we'll go 3 shares. And want my dividends to be reinvested. Order type, I could do a limit order, and that's essentially, it's a little bit more complicated trade, essentially saying that if it hits this price, execute. Okay. But if it doesn't hit this price, don't execute. I'm just going to keep it simple. Do a market order. So market order is essentially saying whatever the market price is at the time that the market's open, go ahead and buy 3 shares of it. Really simple. You know exactly what you're paying, or you know an estimate of what you're paying. So market price, day only. Okay. If I did a limit, I could put the limit price in, and then I could make it good until canceled or good until the end of the day or whatever. And I've done the limit orders on sells, essentially saying, hey, sell my position if during the day the price of this investment gets to 172. And then if during the day the price reached 172, Schwab would automatically sell everything I owned of it. Okay. So market order, $84. Let's see what's optional. Nah, I don't want to do any of that. Okay, and review. So it's going to ask me to verify the order. And everything looks good. Place the order. Yeah. If I go to order status now, you can see that it is an open order right here in this corner, open order. That just means that it hasn't been placed. Okay. I've given the instruction to Schwab. I want you to buy 3 shares of this. And as soon as the market opens, they're going to place that order. Okay. And I can change it and cancel it between now and then, and there's no penalty. Okay. So let's take a look at the other ones. See if there's anything that we're going to do in the rollover IRA. Now, the reason the rollover IRA is lower than the others is because this was just my employer's contributions. I don't contribute to a traditional IRA. I put the money into a Roth or into my taxable account. Oh, I don't want to trade. Let me go back. Okay, so this is more ETFs, not so many Equities, I think I'm just going to leave this account as is for now. It's a smaller amount. If it runs, if I've made the wrong call on some other accounts, and this one's set up to do well, if I make the wrong call, so it will kind of cancel each other out a little bit. On my Roth, yeah, you see I have RVI there as well, AT&T, which is also down to about that point, and then some dividend plays. There's actually, okay, how much cash do I have in this account? 6,000. Yeah, let's make a trade. Let's do some research and make a trade in something I don't own yet. Okay. So in any of your investment portfolios, so if you do Fidelity, TD Ameritrade, Schwab, E-Trade, they will have this research tab that you can click on to figure out something that you want to invest in, right? Because there are thousands of stocks out there. How do you decide, right? So there are things that you screen for, and we're going to screen for stocks. Okay. Actually, let me go back to that screener because I saw something I wanted to. I'm going to screen for A-rated stocks by Schwab. So Schwab, E-Trade, all these brokerage accounts will, at least most of them, will rate the investments based on financials that they have access to. And so A-rated stocks are by Schwab, or Schwab essentially saying, these are stocks that we think have bright futures. And just take a look at some of these stocks at the top. What's number one? It's in alphabetical order, so it's not really ranked. Apple, which Apple's ticker is AAPL, not APPL. You would think that Apple's ticker would be APPL, right? The reason that Apple went AAPL is because if you're AA and there's a alphabetical list, you're at the top of the list. Okay. And I also think that there's already an APPL and something else that we can just see if it comes up. Oh, it's not coming up. Okay. So A-rated, and I like dividends, right? Two ways that you can make money on stocks: buy low, sell high, or dividends. The reason I like dividends is it guarantees some type of return, right? I can a little bit more plan around that. It doesn't require me to realize the gain in order to grow my wealth on here. So I'm going to select the annual dividend yield. And what do you think? Do I want to be down here or do I want to be over here? What? On the upside. So should I click greater than 6% or less than 2? What? Greater than 6. Okay. So out of, if you saw, A-rated stocks by Schwab, 278. I click the 6% and it drops my search down to 10. Okay. Now, if I'm worried about dividends, or if I'm looking for a dividend yielding stock, should I be concerned about the company's debt? Yeah. So let me go down to find debt, and I'm going to do financial strength. Does it make sense for debt to be under financial strength? Yeah. If you have a lot of debt, are you financially secured? No. So I'm going to check out the debt to equity. And if I chose no debt, right, companies that have zero debt that are also A-rated companies by Schwab and give a 6% dividend, 0 matches. right? So I've got to accept, okay, so a company that has some debt. Let's go under 100%. 3 matches. Yeah, the under 1, so the debt to equity ratio means that they have, if you're under 1, if you are 1, you have the same amount of debt as you have to your equity. Okay. If you're under 1, then and equity is assets minus liabilities. Okay. If you're above 1, that means you have more debt than you have equity. That makes me nervous. All right, and then 3 greater than 3, more than 3 times the amount of debt. Yeah. Okay. So it gives me these 3 companies. Okay. What do you think how would you classify these companies? No, I just deselected that. So these are the companies that have less than 1 on their debt to equity. Yeah, they're less. But what type of companies are these? Okay, so the first one's financials, right? How many of y'all have heard of Bank of NT, Butterfield and Son? Never, right? So before we decide to invest in that, should we do a little bit more research into it? Yeah. All right, so I'm going to open that up in a new tab. Solaris Oilfield Infrastructure.
No.
Never heard of it. It's also an oil field energy.
That's not good.
Yeah, but I'm going to take a look into it a little bit more. Okay. And then Spark Energy. Is Spark Energy the same as the oil field? Are they in the same class? No. Oil field is in energy. What is Spark Energy in? Utilities. What are utilities? Yeah, they're a company that's responsible for delivering electricity, natural gas to people's homes. That's a little bit more stable, in my opinion, than an oil field, right? Because oil field, you're going to work until the price of oil gets too low, and then you're not going to work. If you're delivering the energy, are you going to work as long as people are demanding that energy? Say that again. For this, yeah. If I think that energy demand in the near term is going to increase. Possibly. Did anyone hear the news on COVID numbers as of yesterday?
No, sir.
The US has hit a record high for new cases yesterday. We surpassed the record that we had set back in July. Like the record we set back in July was like 73,000 new cases in a day. Today or yesterday, 74,000, 75,000. So it shot back up. So I don't really see, and when could a vaccine possibly be?
No vaccine is really coming.
Spring, maybe. But the springtime, that the earliest. Johnson and Johnson, they have a vaccine in the works, but they ran into a problem with their development, right? Someone in their sample study developed an illness that they could not explain. So they don't know if it was, it was one person out of their entire sample, right? So they halted it to investigate to figure out what was going on. They don't know if it was due to the vaccine or if it was just that person's genetic biology, right? Because people can develop illnesses on their own, right? So all that, taking that into account, I'm not entirely certain how quickly the economy will recover from the virus. So I'm a little bit more skeptical of oil producing companies. More so, like I'd be more leaning toward the utility side. But let's take a look at all three of them. Okay, so this first one's the bank. Okay, have they been hurt by COVID? Wait, that's not, let me get that. Yeah. Have they been hurt by COVID? Yeah, I mean, we can see this. Like every single stock that we're going to look at back in March and April is going to have this huge dip. Okay. Let's kind of go down. Okay, they do a 6% dividend. Their earnings per share looks good, and that was earnings per share as of July 22nd. $3 per share. That's positive. Okay. So who are Butterfield and Son? If you scroll down to the company profile, you can understand, you can read a little bit more about what that company does. Okay. The Bank of NT Butterfield and Son Limited provides banking services and wealth management services. Its geographic segments include Bermuda, the Cayman Islands, the Channel Islands, and the United Kingdom. It offers banking services comprised of retail and corporate banking, treasury services, and wealth management, which consist of investment management, advisory, and brokerage service. So this is essentially saying it's a bank that gives investment advice. Okay. But it gives investment advice in its Bermuda and Cayman Island segments. What images come to mind as you read through that? Where's Bermuda and the Cayman Islands? Yeah, it's in the Caribbean. Kind of, to me, it sends images of like offshore banking accounts for the wealthy. All right. So that's a possibility. This oil field, they have that drop, 6.7%. I do not like that. They are losing money. All right, negative earnings per share. And oil natural gas company, early Texas. Okay. I really don't, offices in Houston, but I don't like the negative earnings per share. So I'm going to kind of cancel that one. Okay. This one seems to have recovered. All right. For the most part, recovered from COVID. 8% annual dividend, $1.55. It's nice. Earnings per share. Okay. It's also located here in Houston. Alternative choice for their natural gas and electricity. Okay, so it's essentially that. The company operates 94 utility service territories across 19 states and the District of Columbia. Is that a positive or a negative? But they operate 94 utility service companies. Or what do y'all think? I would think it's a positive, because does that diversify the company's revenue? Yeah. So this is an option too I may look at. All right. And we won't place that trade because we ran out of time.